Hello everyone, welcome back to the Monopolistic Investor YouTube channel, and today we'll be looking at what is happening with the markets, why is everything suddenly going up, what is the story behind this momentum, and also I'll be looking over at one company that I recently bought in the Nabud projects portfolio. I don't know if you noticed, but my father owns an LLC in Poland, and we are investing the LLC's money into the stock market because we are allowed to. And I will show you what investments I made there. So, first of all, let's get right into the news that are moving the markets today. You can see that many different companies, CME Group, Old Dominion Freight Line, Crocs, Spotify, Grab, Netflix, Shopify, SMCI, Ultra, well, a little bit. As you know, many different companies are significantly higher than they were before. So what is the reason? Well, the number one reason is what Donald Trump recently said about tariffs. As you all know, Donald Trump is very keen on protecting the US economy, and that is a very good thing from his point of view, and it is. However, what needs to change is the way that those tariffs are impacting the US economy, because they aren't as good as they should have been. There are now voices that the US that is powerful is the US that collaborates with other countries. So they can't do it alone. I'm not a US citizen, I'm Polish, but I also think that this applies to any country. Many countries need to collaborate instead of doing trade wars with themselves. So we can see that the S&P 500 and Nasdaq were up 0.7 and 1.4% this Thursday, as Donald Trump said that he will significantly cut the 145% tariff on Chinese imports. That doesn't mean that all tariffs for China will be gone. No, they will be significantly lower. And so you can see that companies such as Texas Instruments that were releasing earnings results jumped by some percentage points. I think that is also due to the fact that tariffs were, but we'll see. We can see that Procter and Gamble slipped a little bit. Well, those are pretty boring companies. Everyone knows them. Of course, one little small number and the so-called investors are suddenly concerned, but you can see that the largest tech companies in the world are doing big moves today. And surprisingly, or maybe not so surprisingly, we can see that Tesla, which is the car company, they are up, even though they are losing money. They showed their earnings and they missed them, and guess what? They are still up. So that is one thing that I don't understand about investing sometimes. Intel is going to report their earnings this evening as well, and they are up 3%. I think due to the fact that they have a new CEO. Other than that, we'll see what will happen. Of course, uncertainty all the time. But let's get on to what is really happening with Donald Trump. So what we have here, the White House says it is close to trade deals with several countries. These deals will likely result in lower tariffs than those announced at the beginning of April. However, the administration could be faced with a time crunch in the coming weeks, as it negotiates with at least 57 countries. Trump could always change his mind in the meantime, and even if tariffs remain where they are right now, they could weigh on the economy. Now, of course, we all know that Donald Trump likes to change his opinion a lot. I'm not saying that's either a good or a bad thing. He has his own reasons. I'm not a US citizen. I'm not going into politics. I'm looking at this from an investor's point of view. And I think that the decision to pause those reciprocal tariffs for 90 days, that was a good thing. Bill Ackman, the famous investor we all know, was the advocate for that. And I think finally Donald Trump realized that it's not the best idea to tax everyone and everything, only to do specific, uh, you know, um, products that are, for example, a threat to the US security, for example, from China or to China, sorry, like chips. I think that they will still be with huge tariffs, but I guess that they are making a good turnaround story right now. Of course, Trump can always change his mind. We can see an example here. He's also doing this impact. He's making pressure on Jerome Powell to lower interest rates. I don't think that's the best. Jerome Powell should be apolitical, and so Donald Trump shouldn't do it. I'm not saying Donald Trump is a bad politician, or he doesn't think US is important. I think he thinks it is. He's a patriot, and you see it. But he shouldn't make Jerome Powell lower interest rates by force. He has been apolitical, and I made an article for that for my paid members on my Substack, so you can check it out. But I think it shouldn't be done. So that's my view on what is happening. And we also get to some other news. Of course, Alphabet, the company that is synonymous with the internet, is in a bit of a pickle right now. We have some news that, for example, they were paying Samsung Electronics an enormous sum of money every month to pre-install Google generative AI app Gemini. Of course, all of those judges are after them. And some people also, I don't know why they are doing this, but they are also not happy about the fact that Google Search, the Play Store, and Google Assistant are the default on Samsung mobile devices. For them, it's monopolizing the Android ecosystem. Well, guess what? It's the best possible thing to happen to consumers, actually. Google is the best. People like them. What about the Play Store? Well, obviously, where would you else install anything else from? It's reliable, it's fast, it's safe, secure. People like it. They trust Google over that. And also Google Assistant, guess what? I recently had to switch over to a Nokia 800 tough phone for some time at least because my charger is broken from my iPhone. And so, guess what is on that phone? I have KaiOS, which is a different kind of system, but my friend who's really into electronics said, oh, this is really Android. Well, I don't know really. I'm a programmer, but I'm not really interested in that. But all I can say is that Google Assistant, Google and YouTube are on that damn phone, It isn't a smartphone, it is a damn phone. So, we'll see what will happen, but, Google is being bashed over from different sides. Also, Google wants to monetize Gemini with ads as soon as possible. We can see that advertising is a really big source of income for them. And we'll see today actually, because their earnings call is today after the market close. We'll see how it goes. I think investors will look at the Google Cloud server segment, how it's growing, how many customers are leaving it or buying. People will also look at the advertising revenue and the possible impact that search might have had because of some LLMs. Well, guess what? People are still looking for information traditionally. When you are looking for example, the local restaurant you want to go into because your friend recommended it to you because it has some nice, good old pizza. Well, you aren't going to use Apple Maps, are you? Or Waze. Waze is currently now part of Google Maps. Or Bing Maps. Who the hell uses Bing Maps? No one. Everyone uses Google Maps. You have 120 million local uh, local guides, so it's a very wide mode thing. Many people are overlooking that. But we have this thing here that Alphabet could see some impacts from reduced spending on digital advertising if businesses feel the tariffs that are impacting them. What do I think of that? Well, all I know is that businesses will usually spend their money either here or on Meta or on Microsoft. I think Microsoft's advertisements may be cheaper actually for some reason, although I might be wrong, so check that. But I think that Google still has a strong position. They have YouTube. Many people forget that YouTube is a very, very resourceful thing for Google, as it has many users. Many people are creating content on YouTube, including me right now, and so I like it a lot. And I don't think that businesses will stop doing advertisements. Well, of course, during a slowdown, some businesses might not do it. But actually, what businesses should do is increase the amount of money that they spend on ads. So we'll see. Here we can see that its operating margin have been growing. The Google Cloud. You I'm very happy by the growth in Google Cloud. It's for such a big company. Look, just last quarter, Google Cloud grew by about 30%. But they are still noting it was capacity constrained. Also, don't forget their Waymo. That's why I'm an investor in them also. And I like the fact that they're collaborating with Uber. So we'll see today how it will goes. And now for the big news. This is the XTB. This is the place where I buy companies for my father's LLC, Nawood Projects. And I bought two companies. Paid subscribers got access to the news earlier. I'm telling you now what I did. I bought a new company called Text SA. You probably saw my articles sometime before on them. They are a Polish-based company which makes live chat software, help desk, and also don't mind this is wrong. For non-US stocks it will be wrong. This is my tool, by the way, Market Vision. They are a company that is involved in the service of doing better customer service using text primarily, and they want to make it easier to use. They want to make it more scalable and add automation to it. And let's look at its products. What is also interesting is that this company is actually led a lot by their co-founders. So a lot of the shareholders are actually the people who founded the company. Look, here is the dark blue, this one, agreement of shareholders, founders, and key managers. So 41.3% according to this. Now it's actually, I think, 38. I think due to some, I don't know, maybe conversions problems. I don't know, maybe they sold a bit. I'm not sure, but it's still founder-led, which is rare in tech companies, especially, I think. and also in the US. But this is a Polish company, my home country's tech company, and it has really high gross margins, 80%. So it costs almost nothing to make their product. And they offer those products. LiveChat, which is a customer service platform which allows for a human agent across all channels asynchronously. So you just contact a person and they will respond pretty quickly. It's integrated with Messenger, for example, Salesforce, even HubSpot. They have many collaborators. Chatbot, well, it's their platform to build and launch conversational chatbots without coding. But what's even more important is the fact that this company has made their own large language model. They aren't using OpenAI's model, they aren't using Microsoft Copilot, Google's Gemini, or ChatGPT. They are completely independent from those companies, which means that it's better for their shareholders. They are not dependent on any companies and so are more efficient. They have complete control and can offer a more tailored user experience. Helpdesk is a special software that helps team members to make tickets for different problems. Knowledge base is a tool which uses AI in a very smart way. It makes a web page for your store in which all these help articles are generated by AI. Even you can have feedback on the amount that this helped your customers. You can track it, you can look at all of that, and all of that is offered in their 24/7 customer support. It has an open API, so developers are really happy. I like that. And over 200 live chat integrations with other products. They also have made their own marketplace, which I looked at some point, because to tell you the truth, I was actually interested in it, and I think I will probably make some extension at some point for them, because it allows for pretty like you can see leveraged income, because it's not passive income, it's leveraged because you work once and then you sell access to a tool on this e-commerce store. Well, not e-commerce, sorry, but software store. And also they have made this tool called OpenWidget, which is a free tool that allows you to easily create and install a functional widget supporting e-commerce directly on their website. So now let's check out the company's overview. We can see that they own contracts with many different companies, including PayPal, IKEA, McDonald's, Ryanair. Those are really high quality companies. They will exist. Even Adobe. I'm an investor in them, so I'm happy for that. Plus 500, I think, is a brokerage company, I guess. Look, 150 plus countries, 25 plus companies from the Fortune 500 list. And you need to look at this from those companies' perspective. Many people think that, there are some free competitors to text essay, and yes, that is true. I'm not saying it isn't, but you need to place yourself in the position of the customer relations manager in those companies. They want to use software which is proven to be useful, which has proven customer support, which is easy to use, and offers good value for their money. And Text SA is one of those companies. They might not be like the cheapest, but actually people like quality products, and so they will pay for that. That doesn't mean that it's without any problems. Of course, they had some problems, and they still have right now. I will go into this, but you know, they are transitioning from a one product company, because at the beginning they only had live chat software. They even were called live chat software, but now they are more focused on unifying the user experience across all of those products, which will allow for more upselling. For example, right here we can see the revenue breakdown by geography. We can see that 30% of their monthly recurring revenue, so from subscriptions. For the US, it takes up 30%. Poland is about 1.5%, so really slow, and the rest is history. So we can see they aren't dependent on my home country. What is happening here? The latest highlights is that they are now changing the way with live chat tickets. You know, they don't have those help tickets right now. They have completely obliterated them, and it's only going to be used in help desk software. Now they got their first contract with $1 million per year, which is an existing customer. Now their existing customer liked their product so much that they paid an additional $1 million for another contract. I like that a lot. Now they are introducing crypto payments, and that is a bit was a surprise maybe to some people, but I guess they want to enable people to do what to pay for how they want for their software. I actually looked at their earnings call transcript, and they mentioned they only did it because their customers asked them to do. So we can see it's a bit similar to how Amazon did, because Amazon listened to their customers and they did it for Amazon as they wanted it. So they are learning a lot. Text essay, they are learning a lot from Amazon. I like it a lot. That's why I bought them. They don't want to establish a crypto reserve. I looked at their earnings call. It was fine. No, the company's representative was answering everything clearly, and we can see, and they have a partnership with HubSpot, a really big company in the US. This is just for the certification, so that it will be easier in some way. I don't know exactly how, but it will be easier for them to get bigger customers if they get this certification. I don't know what it means really, as I haven't looked into all the details here, but I guess it's the correct move from them. We can see that their monthly recurring revenue grew by 7% around 6.9%. So, well, it's not like tremendous, but at least it's growing, and we like that, of course. But we can still see that they are pretty dependent upon live chat still as their biggest growth driver. But of course, their help desk software is also growing, well, because people want to do it. Also, their chatbot, well, it stays a bit steady. It's steady, it made up smaller amount, but now it's a bit larger, but it's not growing, as fast. And we can see that their monthly recurring revenue is slowing a bit in the recent quarters. Not a problem with me. But, the amount of customers which have paid text SA more than $500 are growing faster than the people who have less than $500 spent on this company. Why is that? Because of text SA's upselling. They can use their company's products to upsell to customers, and they offer promotions for some people as well. That is a really good thing. Yeah, so we can see that more people are using multiple products. That is a good thing. Why they are showing it to shareholders here? Well, because They have recently experienced a loss in the number of live chat customers, but they are focused on the average revenue per user, or ARPU, and now, or ARPL, sorry, average revenue per, sorry, I got it. Yes, oh, sorry, per license. So they changed it from the earlier used term, ARPU, for the average customer. So it's the same, basically. But it might be a bit of a disappointment, but also they have made the choice of changing the native tickets in live chats to be completely dismantled from the product and migrating to helpdesk. And so, of course, in the earnings call that I looked at, they said that they were expecting the number of customers to drop. We'll see how it goes, but you must look at the positive aspect. They still have those Fortune 500 companies which are their customers. Don't forget about that. They have much experience. Also, there was much competition from Facebook some time ago, when they launched their Meta AI software in 2023, I think. But then in 2024, they started pulling it back. It didn't work. I'm not saying that this company is out of the woods. They have many competitors, especially in the CRM space, such as Salesforce. It's but it may not be as big of a competitor, even though it may seem, because it needs people to be highly integrated into the Salesforce's ecosystem. Well, guess what? Some people like flexibility, and TextSA offers that. We can also see that the number of chatbot paying customers is increasing. So that is positive. Of course, well, we can see that the initial ARPL is going to be lowering, but the average is remaining stable. So, but of course, don't look only at the average. That is not the correct thing to do. We can see for above the limit of the subscription, well, about 30 US dollars is what people will pay for more. This is not included in their monthly recurring revenue, so you can see that they are, peaceful and conservative in their approaches. I like this. Helpdesk software. Well, the recent jump, I think, is probably due to the ongoing cancellation of the ticketing system used in their live chat software, as they were, announcing it prior to this. You can see that increased during to the sunsetting of live chat native tickets, and it supported cross-selling. So really like that. That's why you see their initial ARPL. Maybe it goes down, but their ARPL. It's a bit of a mouthful, tongue twister, I might say. You can see excellent revenue recognition of the product. And so, in summary, they are steadily progressing towards transformation to a suit company. We can see that they have 126 annual growth for helpdesk and 26% for chatbot. And also, keep this in mind. This is a company in the European Union. Here in the EU, we really have so many regulations. We have so many things about cookies, privacy, blah blah blah. We can't put CO2 in the atmosphere. No, but this company found a way to thrive in this challenging environment. It's in Poland and it's growing fast. We like that as investors. Of course, now we will look at their financial results. We can see that their net sales increased 5%. And well, their EBIT, so earnings before income taxes, decreased a bit. So I guess their costs increased. You know why they increased? On the earnings call, they told us that they are spending in two places at once the cloud operating expenses. Why? Well, it's because they are migrating from one provider to another. They are also trying to uh, integrate all of their solutions into one. So you can see there they are a suit company. So it's a bit similar to what Adobe is doing. We don't have Adobe this, Adobe that. You have Adobe Creative Cloud all in one box, and you can easily switch between what you want. So I guess they are doing toward that, and I like that. Of course, we can see that um, overall their financial results might not look the best, it's going a bit down, but you can see that they are increasing costs, so mainly IT infrastructure costs. Many investors are worried about capital expenditures, but you should know that usually companies which invest in their infrastructure are the ones that will win. Maybe, not saying they will, maybe they will. This isn't financial advice, remember. Always do your own research. But earnings before interest, taxes, debt, and amortization increased. You can see that their margin 58.2% is a net margin, I believe. So what we have here, future revenues is spread all over the time. So we can see that this has actually gone down a bit from 74 to 73 million. Maybe not the best, but look, their cash position is positive. Of course, they need to spend some money on the dividend. They are offering something like 10% dividend yield. As you can see, the revenue by product, it's led by live chat, of course. Helpdesk being the smallest one, and of course having the biggest growth because of their latest change to live chat. So we can see that the change to those customers is influenced by that, and also chatbot. Well, of course, they can't do everything all at once. They can't control everything, but they are committed to the shareholder policy, and in Poland, I guess people like dividends more than share buybacks. I think it's because of the nature of our country. After communist times, well, we people like to get our cash. Well, maybe it's not the best approach always, but there is this pension type of mindset, I think, in Poland. So they aren't the worst, isn't the best. But they are uh, increasing their revenue at least a bit sometimes. Right now, it may not look like the best, but sorry, I think this might be a bit wrong here. Of course, yes, because of the caching of the data. Sorry, it's not showing here, but let's look at their statistics. We can see that their debt to equity ratio is 0. It's true, they have basically 0 debt. They have a net cash position. I like that a lot. Look at their return on equity metrics. So the money that the shareholders have rights to. Look at this amounts. Return on assets 50%. Return on invested capital 81. Gross margin is 80%. Operating margin 50. Profit margin 47.53. I don't think those are the most recent metrics, but we'll see them updated at some point. I bought them at a valuation which I found a lot of undervaluation in this, but let me just open up the analysis that I did at some point. Yes, this is the analysis I did. Look, their net cash position is just tremendous, engulfing this small pond of red, not sea of red, it's a pond of red. Their liabilities are also small, So really happy, really. Look, it even changed now to 0. So while their revenue is a bit slowing down, I'm not concerned about their products because it's sticky. Many people are using their products, and here I had to modify it by hand because my tool isn't yet optimized for every currency, so it just doesn't show the currency. Remember, this isn't something which I can guarantee. I cannot. It may even go bankrupt, this company. We'll see what will happen. But for a 10% revenue growth, which is a modest thing, I think, because looking at their quarterly results, well, over time they had 30, 40, now they have a bit of a slowdown. We'll see how that happens, but it's not impacted by tariffs, I must tell you. Even if we assume 4% growth rate, still pretty fine. No, sorry, I haven't looked at 0% revenue growth rate. But I think it's still a buy right now. Remember, this isn't a buying recommendation. Do your own research. As of the time when I was sending this article, I couldn't buy text as I on my dad's account because I'm not 18. So I have to buy it with my dad. So I look at that and I wasn't a bit sure. Well, to tell you the truth, that was 2 months ago. Today we have the 24th of April. And to tell you the truth, I'm not always, convinced of this company yet, Even though I like this company a lot. I bought the shares and still sometimes there is a small nagging feeling in me that I made a mistake. I don't know whether I have. From what I'm seeing, this is a great company, and especially with the co-founders at the steering wheel and the dividend company. I think it's a asymmetric bet. Also, this is on their website, text.com. You can see very generic website name. Now let's make a story here. In the old days, customer service was manual labor. Customer service representatives handled cases manually, spending hours on repetitive tasks. Blah blah blah, visitors, back office, websites, tickets, chats. And this agent, you can see, he is getting on top of his head, He wants to serve those customers, you can see here. Some of them are smiling like those three, but 40% of them aren't happy. You can see they are sad as they are impatient. And brands hired more agents, managers, and supervisors to scale their customer service. It was costly, prone to human error. They drank too much coffee, and worst of all, it was degrading the customer experience. You can see they are sad. Those days are gone, and the chapter is now closed. You can see new messages. Today, assisted customer service. We're in the world of assisted work. Customer service representatives automate repetitive parts of their jobs. The products they use to grow in intelligence with every customer case solved. You can see that this is the AI brain. You can see second brain. It's very useful. The agent is training the assistant with the customers. And so they are connecting everything. So the website, you can train how it should respond in accordance to your brand. You can connect to the knowledge base, which is where customers will look for the answers to your questions. And you can check the efficiency of those questions and answers. It has a public interface. It's predicting, customers' questions. It's really, changing the way that all of that works. And guess what? Tomorrow we will have automated customer service. So a trainer is overlooking the customers, and you can see that the future is bright, and they are smiling faces. I like this drawing, similar to my drawings actually. but you can see that the customer base is growing. Here you can see a smaller one, and here a little bit of a smaller. So you can see that we are going from unhappy customers to now more happy, and now many customers. So of course this isn't a perfect company. I'm not saying I made the best decision. That is just what I did in representing my father's LLC. I'm not saying you should do that. Maybe you shouldn't. And so I'm just holding it. For the second company, I bought ASML, and that company, of course, needs no introduction. It's a company which is a monopolistic company, and it basically towers over every other semiconductor company, as it makes those highly profitable machines, which cost $400 million each and are the size of a bus. Check out some of my articles on them. I like them a lot. And so I'm not doing any buys. I'm waiting for my dividends from Ultra. But as you can see, during the past week, they are pretty flat. No, nothing too special. I guess that Philip Morris announcement wasn't too big of a deal. They basically own a monopoly in the US. They are a company which will always exist. People will always put their health to risk for some reason. I don't know why. Why not get dividends? I don't know. I like dividends, so I invested in them. Of course, not everything here is suited for you. Do your own due diligence, and of course, have a nice day, everyone.